Stock buybacks can be a little confusing. I recently did a YouTube short about stock buybacks and I got this question. It is from Very Fitting. So the question was, aren't stock buybacks a way to artificially raise the value of a stock? Surely if the stock was worth 13 pounds a share on Monday, and because the very same people buy more stocks, it's not actually changing the value of the share via any profit being made, but just artificially reducing the amount of stocks that are available to buy. So, Very Fitting, thank you for the question. Now, I do agree with you that stock buybacks do not directly impact the profitability of a company. Say a company buys back their stock, 2 to 3 years down the line, their income is not going to be affected by that stock buyback that they made. What is going to impact their income is their ability to sell products and services and whatever line of business they're in. So really what stock buybacks do is they, as you stated, they reduce the number of shares on the open market. And this impacts shareholders and investors and raises value for them if this is done properly. So imagine this scenario. You've got a company, and just for simple numbers, we've got 100 shares for a company. If you are a shareholder and you own 10 shares, you own 10% of the company. If that company then earns, again, easy numbers, say they earn $100 in a year. First, that's a bad company, but scratch that idea. If they earn $100 in a year, then you as the 10% owner of that company, 10% of the earnings from that year, $10, are attributed to you as an owner of that company. Now, if that company were to buy back 10% of that stock, again, 10 shares, then that would be 90 shares outstanding would be left over. And as you own 10 shares of that company, now you own 10 out of 90, and you own a larger chunk of the pie, and you own 1/9 of the company. Now, does this change the fact that that company made $100 that year? No, but for future years, say they continue to make that much and continue to buy back stock, your percent of ownership of the company continues to increase, and the amount of earnings that are attributed to you as an owner will also increase. So it's much more attractive for investors to be buying into companies where over time they're either owning more of the pie or they are owning larger chunks of income through growing companies or other things of the sort. So it is very valuable and beneficial to shareholders. Now the thing on price, I will say that really stock price is just impacted by supply and demand. So if more people and more companies are buying back stock versus selling stock, the price will go up. And if more people are selling the stock versus buying the stock, the price will go down. Now you can witness this firsthand if you buy into companies that are very thinly traded. Now personally, I've done this where I have bought into a microcap and a company with a small number of shares that are traded per day and a small dollar value. And I have even increased the price and therefore the market cap of that stock. So I will just say that the price of the stock is really impacted by supply and demand, people buying and selling. And that is regardless of if it's a company doing it or an individual investor or a hedge fund. It's all just buying versus selling and supply and demand, and that's what really impacts the prices. So hopefully that helped. If you guys have any questions, make sure to reach out. I am here to serve you guys, and I want to help in whatever way I can.